Hi, I'm Jenny Brown and welcome to this week's MFB News. I hope you're really well, you've had a great week, you've not melted and you have got some lovely plans lined up for this weekend because I think the weather is going to be absolutely incredible. Now, what have we got for you this week? It's the usual format. We're going to run through the latest lender changes, bring you up to speed on where pricing currently sits. And then what we're going to do is move on to talking about GDP. Latest GDP figures have been released. We're going to talk about those figures, what they actually mean, and how this is going to land in terms of interest rate rises over the next couple of months. Okay, so first up, the lenders. So in terms of pricing changes, it has been an incredibly quiet week compared to previous weeks. So last month we had 6,500 products that were replaced and increased across the buy-to-let piece. Now in the last week, there's only been really 4 lenders who have made rate changes. So we've seen rate increases from Clydesdale, the Leeds, who like to change their rates at least once a week. Virgin, Vida have increased their rates by up to 1%, and actually lastly Landbay as well have made some increases. Aldermore Mortgages have not made any rate increases, but what they've done is pulled out all of their products bar one. They've just got one product left. It's actually really nice. It's a 2-year fixed rate and it's available for multi-property applications. So one mortgage application but secured against multiple properties. And this is available for individuals and limited companies. Some people really like this product because it's just way easier in terms of managing paperwork for the application. If you imagine just doing one mortgage application to refinance, say, 10 properties rather than having to do 10 separate mortgage applications, it really cuts down on paperwork, makes things a lot more streamlined. There's just one set of legals that have to happen, so on and so forth. So just one product left from Aldermore at the moment. I don't think there's too much to read into that. I mean, I have traditionally had quite a large product set. I think they've just been really, really busy. They've really sort of removed a load of products just to slow business volumes down, get on top of their service again, and I'm sure they'll be back to market with some more interesting rates soon. Now, in terms of where we are in pricing, so in the personal space, your 2-year fixed rates are now starting from 2.6%. 5-year rates are from 2.91. Now, the 2.91 rate, or the base starting point, will come from BM Solutions. Now, BM Solutions as a lender have been a really key player in the buy-to-let space for as long as I can remember. They've kind of changed shape quite a bit with regards to various kinds of acquisitions, and streamlining things and all those sorts of stuff that happen over when you've been in the mortgage game as long as I have. I thought it's only to be expected. But some of the things that BM Solutions still do, which I think are really, really good. So if you've got less than 4 mortgage buy-to-let properties, the minimum income, well, there is no minimum income requirement there. If you've got more than 4 mortgage properties, they need you to be earning £30,000 a year. Now, to access a mortgage with BM Solutions at the moment, you can have no more than 5 mortgages with Lloyds banking groups. That's not just BM Solutions, it's things like Halifax, TML, Cheltenham and Gloucester. There's a whole host of these lenders that are part of the Lloyds banking group. So just keep that in mind. And the other thing that I think with BM Solutions that I've always really liked is they're quite good with unusual property types, things over commercial, ex-local authority, those kind of slightly more, not unusual, but just, less desirable, sometimes perceived as property types. So what BM Solutions do is they have a valuing firm which is part of their group called Collies, and they will always refer to the valuer. So there is no real hard line in terms of we would not lend on, I don't know, a flat over an office. It's a case of, well, look, if the valuer goes out and he thinks it's okay, then we're good to lend. But likewise, if he comes back with a comment saying that actually the security would struggle to rent, or actually, as importantly, it would struggle to sell because of the location, then it's not going to be one for us. And the other really nice thing here with BM Solutions is most of their products actually come with free valuations. So it's a fairly risk-free kind of approach from your perspective as a borrower if you were to apply for them on something that's a little bit kind of left of centre. Now, so going through the list of rates, so 2-year fixed from 2.6, 5-year from 2.91, 10-year fixed rates from 3.75, lowest 10-year fixed in the market at the moment is currently on offer from Virgin Money. Virgin, again, really good lender. Maximum of 10 mortgage buy-to-let properties in the background with these guys. I mean, that does encompass like most landlords, doesn't it? You do need to have with these guys £25,000 a year worth of income to access a mortgage with them. That can't be from rental. So this is for those people who have a day job and some buy-to-lets as well. A couple of things that they do that I really like. The first one is they have always done and continue to do day 1 remortgages. So if you buy a property today, you can remortgage it inside of 6 months, because that's always the common conception that you can't actually remortgage a property unless you've owned it for less than 6 months. That's not true. Virgin are one of those lenders who are happy to scoop up those kinds of deals. The other thing they do as well is consumer buy-to-let. So consumer buy-to-let is where it's essentially, this is really around the regulation that sits around the lending itself. And it really applies to those properties that you're looking to put a mortgage on, where it was not acquired with the sole purpose of renting it out. So you bought it to live in and then decided to rent it out. You inherited it, would be another example of this. And Virgin are one of those lenders who are able to take on board that kind of arrangement. Now, there are lots of other lenders who can do this, but not every lender does it. So it's just good to know that Virgin are in that space. Now, in terms of the limited company pricing, where are we there? So 2-year fixed rates from 2.6% now. 5 years from 3.69, 10 years from 3.96. Now, 3.69 5-year money's the lowest rate on the market at the moment is from Shawbrook. They're a commercial lender, really, really good lender. I really do rate Shawbrook incredibly highly. Now, the benefit of dealing with someone like Shawbrook, who's more commercial, is they can certainly understand the more complex deals. So by that I mean trading limited companies, layered limited companies, structures where maybe they don't fit with the more conventional buy-to-let lenders. So if you've got, for example, one shareholder who's an expat, that could work with these guys. They're also a bit more flexible on properties as well, so smaller studio flats, that kind of thing. They also have the ability to be flexible on a light amount of adverse, so not huge amounts of adverse, but if there's a sort of a misdemeanour a couple of years ago, they're much more likely to take a view on this kind of thing than those lenders who are very much driven by algorithms, automated credit scoring. So great news to see Shawbrook offering a good rate there. The 10-year fixed rate, cheapest one at the moment, is from Lendinvest. Lendinvest are what I would call one of the newer lenders to market. They've actually been around for quite a few years now. With these guys, as you would expect, no maximum number of properties in the background, no minimum income. The mortgage can run to the eldest borrower's 85th birthday. They can do day one remortgages, flats over commercial, new builds. So lots of great bits of lending policy within these guys as well. Now, the other thing that I just wanted to touch on in terms of lenders, which I think, and I've mentioned this in previous weeks, is kind of an unintended sort of fallout consequence, as it were, of interest rates going up. So when lenders are doing their rental calculation, what they have been able to do for 5-year fixed rates is say, okay, well, rather than 125 for limited company or 145% coverage for personal against a notional rate of 5.5%, they have been able to use the pay rate of the 5-year fixed rate. So as you imagine, as the pay rate of 5-year fixed rates have been increasing, that has meant that these rental calculations, which were, are the most generous on the market, have started to edge up, which means that actually landlords can borrow less per pound of rental income now than they could 2 or 3 months ago. Now, it doesn't mean that every mortgage application is doomed. These numbers are still working out perfectly well, particularly in the limited company space on 5-year fixes. But if you did have a property where you were really kind of pushing the boundaries in terms of rental calculations and relying on those very generous calculations in months gone by, you might find things are a bit sticky. But if that, you are in that situation, just give us a call. We're happy to run the maths for you. The latest GDP figures have been released. So UK GDP has increased by 0.4% in the 3 months to May 2022 and by 3.5% in the 12 months to May 2022. So this is alleviating concerns about an immediate recession. So breaking this down slightly for you, so services output grew by 0.4%, production grew by 0.9% in May, construction grew by 1.5% in May. This is construction's 7th consecutive month of growth. Non-consumer facing services grew by 0.5% in May. However, output in consumer facing services fell by 0.1%, and this is driven by a fall in retail trade. Now, the Bank of England had predicted the GDP would contract in the April to June quarter. So this is now expected that actually we're sort of just kicking things down the road, and the expectation is still very much that things will continue to contract or will contract further this year, and that the risk of recession is much higher for the second half of 2022. However, against the backdrop of all of this, the pressure is mounting on the Bank of England to tame inflation without snuffing economic growth. So the fact that GDP has increased above where people thought it would be is really showing that actually things are holding up relatively well, and therefore the indication is that essentially the economy can withstand tougher rate increases to try and tame inflation. So to this end, the markets have kind of moved on in terms of their thoughts about what will happen with the Bank of England base rate, and this is the bit that you need to be really, really mindful of. There is now a 95% prediction that August base rate increase will not be 0.25, it will be 0.5%. So 0.5% increase in base rate in August, and this is in just a couple of weeks now. There's another prediction that there's going to be a further increase in September. This is now 50% likelihood. the base rate will go up by a further 0.5% in September. So we've got 0.5% in August, 0.5% in September, which is obviously 1% in total. So look, I think, I'm really sorry because I know I do sound like a broken record here, but the message is, very, very clear. Interest rates are going to continue to go up. And actually, do you know what, even if it is just 0.25% and this 0.5% doesn't sort of come out this time around, it's still an increase. So the very much expectation is rates are going to continue to rise for the rest of this year and into next year. So mortgage pricing will follow this. So actually, if you are in the market for a mortgage, you really do need to act now. For those people, and I am speaking to clients who are on variable rates, and they're saying, well, at the moment I'm paying, a rate of 4%. And actually, I'm in a limited company, if I'm looking at a fixed rate now of 4.4, I can't really see the point of it. It feels too expensive. Just keep in mind this 1% increase by the end of the year and really do reconsider your options. This really is your final warning, I'm afraid. That is everything from me this week. Sorry, I know I sound like a real doom and gloom merchant at the moment. So I am looking forward to the time when we can start talking about lenders bringing out, exciting new products and that kind of thing. But at the moment, obviously, there's just this whole kind of inflation, interest rate increase thing going on. So we need to really focus on that because it is really, really important. So if you have any questions, we'd love to hear from you. 0345 345 6788. Have a look at our website, mortgagesforbusiness.co.uk. All that's left for me to do is wish you an absolutely wonderful weekend. Please stay cool, and I will catch you again same time next week.